It's time for your Low Country real estate market update. It's the Brian Beatty Real Estate Show. Brian is one of the top 1% real estate agents in Charleston. Find him online at listingsincharleston.com. That's listingsincharleston.com. Or call him at 843-345-1273. Now, broadcasting from the WTMA studios, here's your host, Brian Beatty.
Good Saturday morning. This is the Brian Beatty Real Estate Show here on the Big Talker 1250 WTMA. Thanks for joining me this morning. I'm your host, Brian Beatty, and I've been here on WTMA for a little over a year talking all things real estate here in the Low Country. So if this is your first time tuning in, I like to take national, regional, local news and apply that here to the Low Country so that if you're considering buying or selling a home, you have the information you need. You've got information on trends in our marketplace and stories and experiences from me, someone been in the top 1% of agents on the market since 2009, so that you can make some informed real estate decisions. So here this morning, I am live in the studio. I am joined by Bill Sandvig of Movement Mortgage. Good morning, Bill.
Good morning, Brian.
And we'd like to take your calls. We've got an outline for the show that we'd like to get some data through. I'm going to give you an update of where we are after first quarter 2014. We had a very busy first quarter. A lot of really positive numbers that I'd like to share with you a little bit later on in the show. We're seeing a lot of people start to list their home, especially for sale by owner, and that's something I have a lot of experience in. So I want to talk with you about that for a little while. And then we'll get to a few other things, kind of bits and pieces here and there. But I wanted to start first with just the mortgage market, Bill, and have a conversation with you about that and about a few other things. And before we get started again, if you'd like to call in, if you have a question, comment, you've got one of the top lenders in the region, you've got one of the top agents in the region, we'd love an opportunity to answer your questions and help you if we can. The number here in the studio is 843-556-1250, 556-1250. So, Bill, I was reading a report a little while ago that said that interest rates dipped down last week, which is some encouraging news.
They did.
And so I'm looking at the numbers here. They went from 4.41% to 4.34%. And certainly nice to see a little dip in mortgage rates. If you look at where we were last year, we were almost a full point lower, weren't we?
Yeah. So we have a small trend down this week in rates. Good news for interest rates and home buyers means bad news in the marketplace for investors. Mm-hmm. The stock market took a large hit this week, and that means good news if you're closing on a house or looking to refinance. But in the macro scale, things are still ticking up. We've seen over the last 12 months that when we have bad news in the economy, we do see rates tick down a little bit. Mm-hmm. But anytime there's good news, rates shoot up. So if you look over the last 12 months, they just keep ticking up, ticking up, ticking up. And that trend is expected to continue. So
is what you're saying, am I reading you clearly that when there's bad news, economy related, the interest rates go down a little bit, but when there's good news, they shoot up more than they're shooting down?
Exactly.
Okay.
And the reason that mortgage rates go down when there's bad news in the economy is because investors are shifting from more aggressive investments into conservative investments like mortgage-backed securities and bonds. Okay. And that's why the interest rates will fall. Gotcha.
Talking with Bill Sandvig of Movement Mortgage. We're live in the studio. If you're just joining us, feel free to call us with any real estate-related questions. 843-556-1250 is the number here in the studio. So then I was looking at South Carolina just as a whole, looking at our unemployment versus national unemployment. It looks like nationally we're still at around 6.7%. In 2013 in South Carolina, we were at 6.2%. So already we were below the national average, but the forecast for this year is to be below 6%, closer to 5.9%. And if you recall, we were hit fairly hard by unemployment back at the point in which our market really was suffering.
One of the worst states in the country.
Right, absolutely. And then I look at things like permits, look at the amount of permits, look at the number of people building new construction opportunities. And I talked a lot about this last program, about where the new construction side of our market is headed and how much we need that volume in order to balance out our market. So I looked at the permitting trends in South Carolina. We went from a little over 4,700 in 2012 to over 5,000 in 2013. And in 2014, we're projected to have closer to 5,300 permits. And that certainly has been on the rise. So if you just look overall at the market, I want to tie this back into interest rates, because let's say someone wants to buy a house and they only want to be there for, let's say, 5 to 7 years. What would be the benefit in your mind in doing an ARM, an adjustable rate mortgage, versus a 30-year fixed or a 15-year fixed? Why do people go one route or the other? Because I think ARMs have a bad rap.
I definitely think ARMs have a bad rap. The adjustable rate mortgage, really in 2000.
Hey, Bill, sorry, I'm going to put you on hold because we've got Mike on the line. Hey, Mike, how are you this morning?
I'm doing okay.
Good.
I have a question about my wife and I are looking at a property and came across a property that was listed for probably close to $100,000 less than it originally sold for when it was built about 8 years ago. And after investigating, it looks like it's HUD owned, possibly. I'm not sure if that's foreclosure.
Okay.
Can you just give any advice on, because it did say as is with no disclosures, can you give any advice?
Sure.
On certain things to look for?
Yeah, well, any bank-owned property is going to be sold as is. So that's the first thing to note, is that very rarely do they make repairs. Having said that, as someone that has done, well over 100 short sales foreclosure deals, that's almost all of what I used to do. When banks first put property on the market, they have to make a decision as to whether they're going to sell it as is, or if the bank is going to fix up the property. If the bank chooses to fix up the property before they list it, then the reason they're doing that is so that they can appeal to FHA and VA buyers. The better condition the foreclosure is in, the more opportunities they have to sell it to people using various loan amounts or loan products. In this particular case, do you have any idea of the condition of the property?
From the pictures, again, seem to be okay, but again, you can't tell from structure. Other than the pictures, I mean, the property itself is just on about a 2-acre tract of land. That definitely looks like needs some adjustment, but
okay.
The actual, it's hard to tell with the structure. I mean, the fixtures and everything seems to be updated. It's a house that's less than 10 years old. The carpet seems to be intact. Didn't notice anything from the pictures of like drywall being taken down or anything like it had to be renovated at all. But the entire house also, there was only one of the bathrooms out of the 3 bathrooms that were photos. So I'm sure without going through like a walkthrough.
So agents have 2 different ways of doing this. One is the very direct way where they photograph the issues so that people looking online have an idea of what they're getting themselves into, which I think is the right way to do things, because you certainly don't want to trick people into going into the house only to find out that it's going to require at least $50,000 worth of work. But then, of course, you have the other school of thought, which is, hey, let's get as many people through this house as possible. And, it is what it is. When they walk in and they see there are issues, they're either going to like it or not going to like it. When I used to list bank-owned property and short sales, if there were issues, I would document them in the remarks section of the listing, and then I would take photos of that so that, I don't necessarily want somebody that can only use a VA loan, which is 100% financing and requires almost a move-in condition-ready property, to go and look at something where the roof is caving in. It's a waste of time for that person. Sure. So it's tough to say without actually looking at the property, but if I can jot down, or I'll have John jot down your contact information, and I'll look at that property on the MLS as soon as I'm off the air, and I can give you some insight as to why they're priced, where they're priced. And then in the MLS, which only real estate agents have access to, I've got access to some information that might help us in determining, how motivated they are, what kind of pricing history is associated with the property. Then we can look at things like taxes, resale amount, and if there are any attachments online that document, termite, moisture issues, inspection-related issues.
I know the house has been on the market, often on the market, relisted for about 4 years now.
Oh, wow.
And they kept dropping the price by about anywhere from 25 to 50 each time.
Okay. So it's certainly a higher priced property, and they're just having trouble with it. I mean, you don't have to tell me the address or the price. I think I'm gathering from what you're saying that there's
right, and I can't tell if it's something. I mean, being that it looks like it's bank finance or it's been a takeover. I'm not sure if someone that was kind of upside down in a mortgage or that type of situation. The only other thing that kind of stuck out in the statement, there were no, just like you said, the real estate agent did not really note, definitely needs some TLC in this area or some minor structural. I mean, there's nothing really to disclose there. It did have a statement there, and that was my other question. And I don't know if this is trying to be owner financed or whoever owns the property. There was a statement about $100 down payment incentive, which did not make really was very kind of cloudy to me. Have you seen situations like that where it says $100 down? Ask about the $100 down payment incentive.
Yeah, I've seen that plenty of times. Typically, in order to qualify for that progress or for that program, the property has to be in a certain kind of condition, and then, of course, you have to be able to meet certain requirements. I'm going to let Bill weigh in on that in just a second, but as far as warranting the condition of the property or disclosing any material defects, obviously it's our job as real estate agents to disclose those type of issues to you. But the bank's stance is very simple. They don't occupy it. They don't walk through it. They don't inspect it. So they're not going to warrant its condition, which is why it's sold as is, where is. It's just a liability thing for them.
Mike, to touch on the $100 down program, that's an FHA program that I've seen more often than not be a carrot that leads you to nowhere.
Right.
And what people will do is put that on just as a little teaser, and then we'll find as we work down towards the loan process that either the house doesn't qualify or the buyer doesn't qualify for that program. But it sounds like you need to get more information on this property, and I would definitely, we will follow up with you after the show to talk to you further and get you some more information and see if it's the right fit for you and your family.
Great.
Very good. Any other questions we can help you with, Mike?
That was it. Thanks a lot.
All right. Thank you very much for calling in.
All right.
Cool. So, Bill, we were about to talk about adjustable rate mortgages. Tell me just a little bit more about that. And I think what we're going to do is let's just hit on what an adjustable rate mortgage is. We'll take a quick break, and then when we come back, we'll talk about that in greater detail.
So an adjustable rate mortgage is a mortgage that has a fixed period at usually a lower interest rate for a fixed amount of time. Typical ARMs that you're going to see out there are 3-year fixed and adjustable after that, a 5-year or a 7-year or a 10-year. So typically people are going to do a 5-1 ARM or a 7-1 ARM, depending on the length that they're going to stay in the house. And after that fixed period, the rate will adjust to current market conditions. It'll adjust once a year on the anniversary date and can adjust each year up to a certain max amount of that interest rate. So the question that buyers should have is, how long am I going to be in this property? What is my plan for this house? Because I'm a strong believer that it does not make sense to lock into a higher rate for 30 years and plan for years 25 through 30 when you're only going to be in the house for years 1 through 5.
Right.
Why would you give money to the bank planning for the future that you know this is your starter home, that when you start to have children, you're moving? Mm-hmm. And so after the break, I'd really like to get into some of the differences financially that first 5 years can have if you go with a lower rate adjustable mortgage compared to a 30-year mortgage.
Sounds good. All right, well, we're going to take a quick break, and when we come back, we're going to talk about the market. We're going to give you a quick update on what's going on from the second quarter on. We're going to talk about the first quarter, talk about how the sales looked. We've got an increase in pricing, decrease in inventory, all kinds of good stuff. And then, of course, we're going to talk here with Bill Sandvig live in the studio about adjustable rate mortgages and a few other loan products. If you have a question, please call in. Our number here is 843-556-1250. This is the Brian Beatty Real Estate Show. Please stick with us. We'll be right back.
Have a real estate question? Ask Brian Beatty. Send him an email, lowcountryhomesales@gmail.com. The Brian Beatty Real Estate Show is on 1250 WTMA. WTMA. Now, here's more of the Brian Beatty Real Estate Show on the Big Talker, 1250 WTMA.
Welcome back. This is the Brian Beatty Real Estate Show. Thanks for tuning in this morning. I'm your host, Brian Beatty. I've been in the top 1% of real estate agents here since 2009. and I've been on the air a little longer than a year talking all things real estate here in the Low Country. I really enjoy sharing some stories and experiences that I have. And I also like to I'm a big numbers guy. If you guys have been following me for a while, I take a lot of national, regional, local news and apply that to you, the local homeowner or home buyer, so that when it comes time to make a move, you guys have the information you need to make an informed real estate decision. I'm live in the studio this morning. The number here is 843-556-1250, 556-1250. I'm joined by Bill Sandvig of Movement Mortgage. Good morning, Bill.
Good morning.
We just had a great call. Someone called about foreclosures and walked him through that process. We'll hopefully end up helping him after the show. But if you have any questions real estate related at all, you've got a top agent in the region and a top lender in the region. So we welcome your calls, 556-1250. If you'd like to reach out to me personally, probably the best way to do that is to go to my website. My website is listingsincharleston.com. And on there, you can search the MLS. You can read some testimonials from past clients, take a long look at the properties that I've sold or properties that I have for sale. And if you click on the Sell Your Home tab, you can learn more about my 59-day home sale guarantee, where it very simply states, I will sell your home in 59 days or less, or I'll sell it for half my commission. And really appreciate the folks that tune in and that listen. I've had several calls over the past few months with people that would like to sell their home, and happy to say that first quarter was a great quarter for my team and I. We did 37 transactions, pending and sold, and our goal for the year is closer to 150 transactions now. So just wanted to say thank you for those of you that tune in and for allowing me to earn your business. I really appreciate it. So Bill, coming back to you, we were talking about adjustable rate mortgages, and I think that when you talk about adjustable rate mortgages, most people kind of cringe. They almost have that face after you take a shot of whiskey. It's, they kind of have that little squint or whatever. Please tell me why people have a negative connotation with adjustable rate mortgages.
So the negative connotation around adjustable rate mortgages starts back in the housing boom, and a new product hit the streets called an option arm. So back in 2002, 3, and 4, no money down housing financing was available, and housing prices were starting to shoot up very quickly. And this option arm product hit. And what this did was banks made a decision that we can do riskier lending because of the way that housing prices are going up, and people took advantage of it. What the option arm would do is allow for you to, almost like a pick-a-pay loan. It has the negative connotation of a pick-a-pay loan, where you pick what payment you want to make, be it interest only. You pick the interest rate that you want to pay as low as possible, and you're trading for a higher guaranteed payment later on the loan life. So the interest rate was not going to adjust to a current market index. It was going to guaranteed adjust up in a certain amount of time, and your payment was going to balloon at that same time. So you have two really bad cliffhangers on this loan product just waiting to happen. Well, why did people do it? Because they felt they didn't have to worry about it. My house is going to appreciate 20% every year. So even though I'm putting no money down, in 3 years, this house is going to be worth 60% more than what I paid for it. And I'm going to be able to refinance or sell at a huge cash out my house and not ever worry about those two cliffhangers, the increased rate and the balloon payment coming out. Well, we all know what happened. The housing market turned. People couldn't sell their homes. Housing values dropped, and they got stuck in these mortgages. They couldn't refinance because they didn't have equity. They couldn't sell because no one was buying. And here it comes. That adjustment that they signed up for hits, and now they can't make their mortgage payment. And so everyone knows, and it's been well documented, what happened after that.
Right. So we're talking with Bill Sandvig of Movement Mortgage. If you have any questions real estate related, anything real estate related, please give us a call, 843-556-1250. That's the number here in the studio. We are live this morning. And if you're listening on Sunday at 10 a.m., we do play this show again. So if you're riding around on Sunday morning, 10 to 11, then this is a recorded show. But as you were talking about the negative connotation associated with adjustable rate mortgages, I've got the MLS pulled up, and I was trying to find a great example of a property that shot way up in value and then shot way down in value. And I finally found one. And I know that this happened a lot in the beachfront condo market in Wild Dunes. And I finally found a unit. And I just, when I show property like this to buyers, I always print off the pricing history because it's fascinating. And for people that are just looking into the area that didn't have any sort of association with the height of our market and then the drop of our market, they're not aware of some of these large swings in pricing. But I look at this one property on Seascape, and in 2002, this is a beachfront condo in Wild Dunes. In 2002, it sold for $675, and then in 2005, it sold for $1.1 million. Wow! And then in 2007, they listed it for $1.85 million. It did not sell. And they have been literally on and off the market since, what is that date? July 2006. They started at $1.85 million, and right now they're back to $750,000, close to the price that they bought it at back in 2002. That's a 12-year swing.
Wow. So hopefully they didn't buy that property with an option arm, because that's an example that they're stuck. Mm-hmm. If they bought that property at $1.1 million and on an option arm, that's not a good situation. But here's the good news. So the good news is the option arm is not out there anymore. So you might still hear adjustable rate mortgage and think back to people getting stuck, but the option arm, it's not allowed to be sold anymore. We don't have any interest-only rate products. Qualified mortgage and the reform took that away. What we have now is, and I'm going to talk a little bit deeper on the FHA adjustable rate mortgage, because any buyer out there can take advantage of that, is it's a fixed product for the FHA 5/1 arm, fixed for 5 years, and at the end of that 5 years, there's an adjustment period. That adjustment is capped at 1% in the first year and a maximum of 1% each year after that, with a total max adjustment of 5%. So if you were to get into an ARM today with an FHA loan at, say, 3%, the worst case you could ever be exposed to would be 8%, to adjust at 1% each year after the fifth year. So,
and that's assuming that the market rates are headed in that direction, right?
Exactly. That's a big assumption, because right now, if you were in an FHA ARM and you had been fixed for 5 years and your adjustment period is coming up, your interest rate's about to go down. Mm-hmm. So there's no guaranteed trading for a low rate now and a higher rate later. That's just not out there. It's all based on the market. And if you were going to have your FHA mortgage adjust to 5, 6, 7, 8, 9%, the 30-year mortgage would be somewhere around 11%, which we haven't seen in 15, 20 years.
Right.
So the likelihood of that happening is very low. And so one of the things that when people come in and ask me about ARM product or a 30-year fix, and they just instantly jump on that 30-year fixed product because they've been told it, their parents are telling them that, everyone's telling them, get the 30-year fixed mortgage, plan for the worst. And I see this young couple and they say, well, this is our starter home and we're probably going to be there for 4 years. We expect to be making more money in the next 5 years, and we're going to want a bigger house for our family. And I'll say, let's not plan. You're looking me in the face and saying, I don't think I'm going to be here from years 5 to 30. Let's not plan for 5 to 30. Let's plan for now, and let's see the impact that planning for now can have with an ARM product. So,
what do you typically see in terms of savings on a 5-year ARM versus a 30-year fixed over that first 5-year period? And again, we're talking with Bill Sandvig of Movement Mortgage. We're live in the studio. If you have any real estate related questions, if this is of interest to you, or if there's anything else real estate related you want to chat about, give us a call here in the studio, 556-1250.
So that was a great segue. Thank you, Brian. So today's rates on an FHA loan, let's say 4.25% on a 30-year fixed. And I'm going to try and stay out of the weeds in these numbers because I know we're on the radio. But 4.25% for a 30-year fixed, $200,000 FHA loan. The payment on that, principal and interest, is going to be around $980.
Okay.
A 5/1 ARM for that same $200,000 loan, 3.25%. The principal and interest is $870. So that is a savings of over $110 a month.
Okay.
The thing that I want people to do when they think about comparing a 30-year fix to a 5/1 ARM is really compare apples to apples. We have two different payments here. So if you're thinking about a 30-year mortgage, you're agreeing, I want to pay that higher amount for security. So what would happen if you paid the higher 30-year payment on the lower required 5/1 ARM? That $110 is instant principal into that 5/1 ARM mortgage.
Okay, say that again, because I think you may have lost a few people.
Okay, so you have a lower required payment on the 5/1 ARM.
Right.
If you were to make the higher 30-year payment on the 5/1 ARM, the same payment that you would be required to make on the 30-year payment, but make it on the 5/1 ARM, every single dollar above that $870 I just mentioned is pure principal into the balance. So you are now paying that loan off faster.
Gotcha.
How much faster? At the end of the 5-year period, by making the 30-year payment that you were saying you were going to make if you took the 30-year loan, you have $10,000 more equity in your house for that $200,000 loan.
Over a 5-year period.
Over the 5-year period.
Wow.
You have ramped up $10,000 by making the exact same 30-year payment. You have $10,000 more equity at the end of 5 years with a 5/1 ARM.
That's amazing. Well, I tell you what, we're going to take another quick break. When we come back, I want to talk about first quarter numbers here in the Tri-County area. Again, we'd still love to take your questions. Feel free to give us a call here in the studio. We are live. The number here is 556-1250, 843-556-1250. I'm your host, Brian Beatty. You can reach me anytime. My number is 843-345-1273. Or you can visit my website, listingsincharleston.com. We'll take a quick break. We'll be right back.
Find Brian Beatty online at listingsincharleston.com. The Brian Beatty Real Estate Show continues next on The Big Talker, 1250 WTMA. 1250 WTMA. You're listening to the Brian Beatty Real Estate Show on The Big Talker, 1250 WTMA and WTMA.com.
Welcome back. This is the Brian Beatty Real Estate Show here on The Big Talker, 1250 WTMA. I'm your host, Brian Beatty. If there's anything that I can do for you real estate related, please give me a call. It doesn't matter if it's during the day, after hours. My phone number is 843-345-1273. You can call or text me at that number anytime, or if you're curious to learn more about my sales, my team, my listings, or my 59-day home sale guarantee, which very simply states that I will sell your home in 59 days or less, or I'll sell it for half my commission, please visit my website, www.listingsincharleston.com. I'm live in the studio with Bill Sandvig of Movement Mortgage, and we were just talking about adjustable rate mortgages, and I want to finish the thought with what you said to me off air, because I think it makes perfect sense and it ties in everything that we just discussed.
So what I want to touch on really quick is the exposure that you're giving yourself during like an FHA ARM product. So we talked about how you're going to save money during the first 5 years of that 5/1 ARM. Well, if we're planning for the worst case, what is the worst case with the 5/1 ARM? The worst case is that it adjusts 1% every year after the fixed period. Well, because of the money you've saved during the first 5 years, as that rate adjusts up in a worst case from 3% to 4% to 5%, you do not run the risk of losing money compared to the 30-year rate until 9 years. So you've saved money over 5 years, and then you slowly start to give it back in those years as the rates adjust. You will never, it is a mathematical impossibility to lose money on a 5/1 ARM until after 9 years into that loan.
That's amazing.
The average life of a loan, by the way, in the country, 4.7 years.
Well, I know that I gave you a call about a week and a half ago to run a pre-approval for me for a house that I made an offer on, which ultimately didn't get accepted. And obviously, we don't have to say the amount of the loan, but it was a jumbo rate product. And I was very surprised at the loan rate. Tell me what the interest rates are right now for jumbo, and then I want to move on to market stats.
So unusually, right now, the jumbo pricing is actually lower to on par with conventional rates. So the reason here is the investors just have a palate in the conventional Fannie Freddie world when you're dealing with jumbo products, and investors have a palate right now for mortgages. And so that is holding these jumbo products down. And if the 30-year fix is at 4.375 to 4.25, the jumbo product is right there, 4.25 for a 30-year fix, which is unusual.
And the jumbo starts at what loan amount?
So any loan amount above 417,000.
Very good. All right. Well, again, we are live in the studio. I'm going to dive into what happened in the Tri-County area first quarter, because I know a lot of people tune in and they really like the numbers. And of course, I'm a numbers guy. So if you have any questions, real estate related, again, you've got one of the top lenders in the region. You've got one of the top agents in the region. We'd love an opportunity to field some more phone calls before we are finished at the end of the hour. The number here in the studio is 843-556-1250. All right, so I wanted to get into what happened in our market first quarter. And I want to preface this by saying that I think a lot of real estate agents in our market are confused with the direction of our market. And Bill, you're shaking your head, which sounds like you agree with me. I know that at the very beginning of the year, when I gave my forecast for what I thought was going to happen in 2014, the Case-Shiller Index said that prices were going to rise in 2014 by 6.8%. That was the number nationally that we're looking at in terms of appreciation. If we look back to last year, in 2013, prices were up about 12% in the Tri-County area in Charleston. So, I think we've got some other people in different forms of media, other people that are still top agents that have very different opinions of the market than I do. I was very encouraged by the momentum that we'd built in 2013 heading into 2014. And based on the numbers, we're rocking and rolling. So let me tell you some of these numbers. And this is first quarter or year to date 2014 versus the same amount of time in 2013. So we're comparing first quarter 2014 to first quarter 2013. If we look at new listings that have hit the market, this year we've had 5,042 new listings. Last year, first quarter, we had 4,991. We've only had 50 more new listings this year than we did same time last year. That's a 1% increase in listings. Now let's look at pending sales, properties that are under contract. In 2013, we had 3,274. In 2014, we have 3,601. That's a 10% increase in pending sales. So we have this very small amount of new listings, but pending sales are up 10%. Now let's look at closed sales. Closed sales in the first quarter of 2013 were 2,453, whereas year-to-date 2014, we're looking at 2,630. That's a 7.2% increase in closings. So just looking at those first three categories, it's very easy to realize that we have an inventory problem.
Inventory is going down.
So we are putting less property on the market on a quarterly basis than we are purchasing. That is going to continue to push us toward a seller's market. Buyers are going to have to be more competitive with the property they're looking at, and sellers have the benefit of lower competition. There are more buyers for their home than there were a few years ago. So again, we're talking about the first quarter stats in 2014. We are live in the studio. If you have any questions about our market or anything else real estate related, please give us a call, 843-556-1250. All right, now let's look at days on market. We went from having an average days on market in 2013 of 90 days to 77 days. That's a 15% decrease in the average days on market. If you look at the median sales price, this is where things really start to get exciting. If you look at the amount of sales we've had, which are 2,630 of them, the median sales price in 2014 is $215,000. You know what it was in 2013? $190,000. That's a 13.2% increase in the median sales price. Now you look at the average sales price, because I think different people have different opinions on whether to use median or average. The problem in my mind with average is that, let's say we had a $8 million property south of Broad sell, that's certainly going to skew the numbers a little bit. But even the average sales price 2014 is up 9.5%. So we're seeing yet again a large increase in pricing, and it's very simply due to the lack of inventory. I've said several times on this program that I have a multitude of buyers looking for property right now, and we can't find them anything. So, listeners, if you have a home and you're interested in selling it in Mount Pleasant under $1.5 million, I have several people looking in various price points. If you have oceanfront property, oceanfront condos, ocean view condos, hardly any of those left on the market. We need some of those listings so that we can sell them to the 8 different buyers we're working with looking for that type of opportunity. And then a few others, scattered throughout the Low Country. We've done a really good job this year of taking interested buyers and interested sellers and matching them up before the property hits the market. I just helped this for sale by owner who tuned into the show. Last week, we discussed his property. I walked through it. I told him what I thought it was worth. Turns out he was priced way too low. I was surprised someone didn't come in and snatch it out from under him. I was legitimately concerned that he was priced too low and that he was leaving money on the table. So we agreed to work together. We signed a listing agreement, and then 2 days later, before it even hit the market, we had him under contract for 6% above what he was selling it for. So when you factor in the commission that he was already paying and then the commission that I'm charging, he's made thousands and thousands and thousands of dollars. And guess what? He doesn't have to worry about it.
That's a great success story.
It doesn't have to become his part-time job to sell his house for sale by owner. And he's got the benefit of working with a top agent that's going to protect him contractually, because he had questions about the process that, it concerned me that he was going to be a for sale by owner. Let's just put it that way.
Yeah. I think as we're sliding into the seller's market, it is so important for people to realize the days of sellers just being thrilled that they had a buyer walk through their house and just thrilled and tickled that they even have an offer and just ready to jump. They're gone. And I mean, I see these open houses and cars just pulling into the street, and buyers need to be aware that it is so important for you to be ready and prepared to go into a buying situation, be prepared to go in and make an offer, because if you don't, you have to stand out amongst the crowd now.
Right.
You're going to be in a multiple offer situation, especially in some very key areas in our market. And you just got to be prepared. You have to be approved. You have to distinguish yourself from other people, because sellers, they get to be choosy now. They get to pick. And so if you want that house that you love, be ready.
Absolutely. All right, I'll tell you what, we're going to take one more quick break. When we come back, dive into the numbers just a little bit more because I want to break it down by county, Charleston, Dorchester, and Berkeley. We'd love to take your questions. We've only got a few minutes left on this program. The number here is 556-1250, 843-556-1250. I'm your host, Brian Beatty. Give me a call, 843-345-1273. Or visit my website, listingsincharleston.com, if I can help you with anything real estate related in the Low Country. You're listening to the Brian Beatty Real Estate Show on the Big Talker 1250 WTMA. We'll be right back.
Stay tuned for more of the Brian Beatty Real Estate Show on 1250 WTMA and WTMA.com. WTMA. Now, the Brian Beatty Real Estate Show continues on Charleston's Big Talker, 1250 WTMA.
Welcome back. This is the Brian Beatty Real Estate Show here on the Big Talker, 1250 WTMA. If you're just tuning in, we've talked about quite a bit this morning. We talked about what's going on in the Tri-County area the first quarter of this year. We talked about adjustable rate mortgages and the benefit to doing that. We are live in the studio this morning. The phone number here is 843-556-1250, and I am joined by Bill Sandvig of Movement Mortgage. We've only got a few minutes left, and so I wanted to talk about what I'm seeing a lot of right now, which happens a lot every time this year, and it's for sale by owners. For sale by owners are something that I have worked a lot with since I got into the business close to 9 years ago at this point. And when I first got started, it was a great way for me to learn the inventory, to see if I could help people sell their house. I ended up listing quite a bit of for sale by owners, end up selling the property, helping them buy something else, got some referrals from them, so on and so forth. So it was a great source of business for me. And I think it's a very popular source of business for new agents. So for those of you that have sold a home for sale by owner or that are considering selling a home for sale by owner, I just wanted to give you a few things to think about, really, so that when it comes time to start showing your property or you receive a contract and you choose not to work with a real estate agent, these are some things that can really help you. And I'll lead into this by just telling you that quick story again of the for sale by owner that I listed last week, and in 2 days was able to sell their home for 6% above the price that they were asking, which was just too low. So he ended up working with me. I'm going to handle the entire transaction for him, obviously. It's not going to be at any level of stress to him. He doesn't have to worry about learning real estate in order to protect himself. And at the end of the day, he's going to make more money. So for sale by owners, gosh, I've seen all kinds of people choose to for sale or sell their home for sale by owner. And some of them are very capable of selling for sale by owner. Some really shouldn't be in the real estate business. It's kind of funny. They don't have the people skills. They don't understand the mentality of the buyer. And really, they become the hindrance to the sale rather than just offering the property to interested buyers in an informative and attractive manner, and then having the information to protect themselves contractually once someone actually wants to buy it. So here are just a few things that I can offer you if you're considering selling for sale by owner that should help. And again, if you have any questions, 843-556-1250. We are live in the studio for the next 5 minutes or so. So first thing when you're selling for sale by owner, of course, you want to have your property online. You want to use as many different marketing avenues as possible. But before you get to that point, you need to determine what kind of price you're asking. So the first thing I'm going to tell you is don't use the Zillow estimate. The Zillow estimate is not the listing price or the sales price of your house. And here's why. That Zillow estimate has a 30% standard deviation. There is no way you can use that number in confidence as the fair market value for your home. And the reason for that is because Zillow has no idea what kind of condition your home is in, and Zillow has no idea what kind of upgrades you've done to your home.
When people would call in to do refinances when rates were so low, one of their favorite things to say to me was, well, Zillow says...
Sure,
and
I get it all the time.
Stop right there. Do you have a real estate agent that you work with?
Yeah. So the first thing is you really have to do some research to determine what the fair market value of your house is. If you feel like you don't have the ability to do that yourself, or you don't have the necessary information, then and you're choosing not to work with a real estate agent, I'm going to encourage you to get an appraisal. I think that's the only way that you can have a realistic idea of what your house is worth, unless you are in a cookie cutter neighborhood where almost every house is the same and you have good, reliable data that says your same exact house, same exact floor plan sold last month for X, and that was in the same condition, same upgrades. That's a good indicator. But for the most part, it's very difficult to determine value. What I'm seeing a lot right now is that for sale by owners are undervaluing their house. So if you can make more money, why not do it? The second thing is that you need to fill out a property condition disclosure statement. If you don't have a copy of this and you're considering selling for sale by owner, just send me an email or go to my website, listingsincharleston.com, and I'll send you that form. But it's a state-required form. You have to give buyers that. You have to disclose any material defects associated with your house. The third thing I will say is that it would be highly advisable to consult an attorney and just learn a little bit more about the contract that you're going to be using. Learn the ins and outs of that contract and make sure that when someone puts in something like a date on that contract, that date is an actual achievable date. I see all the time, and I see it from real estate agents. I have to rewrite the contracts because the way that they've presented that contract, I know is in no way, shape, or form achievable. And they're setting up the contract to be in default. And it drives me nuts because I've got the same real estate license that other real estate agents do. And it's amazing to me the amount of real estate agents that can't properly write a contract or can't properly protect their client. And you know what? At the end of the day, if they send me a contract that doesn't protect their client and I have the ability to take advantage of that for the benefit of my client, guess what? I'm going to do it. So those are the very basic three things. Get an appraisal if you don't feel comfortable with the price of your own home. Fill out the property condition disclosure statement and consult a closing attorney to get a good idea of how that contract should read and should be filled out so that you're protected contractually. Well, I'm about out of time. This is the Brian Beatty Real Estate Show. If you'd like to reach out to me personally, my phone number is 843-345-1273, or you can visit my website, listingsincharleston.com. This is the Brian Beatty Real Estate Show on the Big Talker, 1250 WTMA.
Join us for another edition of the Brian Beatty Real Estate Show next Saturday morning from 8 till 9. Contact Brian Beatty online at listingsincharleston.com. That's listingsincharleston.com. Or call him at 843-345-1273. 843-345-1273.